Ladies and gentlemen, welcome back to Chasing Financial Freedom, the YouTube channel where we look at the stock market and how can it give us financial freedom. This is our goal, this is what we stand for. So, without further ado, let's go. Today is the 23rd of February 2021 and we have seen almost a bloodbath in the market. Of course, after 1 year of a bull market, we are seeing some red and some bad news. We've seen especially the Nasdaq falling the most. We have even been 2.4% down, so we were in the 13,000. If we look at the charts, we can see here is the March last year drop and low, and here we have where we are today. So here we can see on a daily chart, we can see a support line here. If we draw a support line, we can easily put it here. So at the moment we are holding back this line, which is good news. And here we can see that we have stopped this bloodbath a little bit. And if you look at the chart, you can see that we are going up like this on a stairs. And if I write it to you, you can see it going like this. So we're going up, 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 a beautiful trend. And here we have a sell-off in September, and you can see here was the support, a strong support line, and we rebounded back up again, a little small pullback, and then back up again. So, and today we believe that we are seeing probably the same thing. And why can we say that? We can say that because we, for the most part, we are still in the Bollinger Band. So you can see here that the Bollinger Band is extended. So we are a bit extending, and usually when the Bollinger Band expands, it usually returns back to the center. So here we have touched the moving average of 50 weeks, and this means that if we don't break this line, so this line right here, we probably won't go down there much further. If you look at a 1 hour chart, you can see here that we have regained right here where we talk about. It was a sell-off, it was a small sell-off. We believe that it was, on technical side, we can see that we were a little bit too overextended, so a small correction like this one was due, and this is what we'll be talking about on this channel. And here you can see that we've broken this 50 weeks moving average, and we have extended the Bollinger Band. And if nothing bad happens, like a black swan event, like it was last year, we probably won't go lower for the moment, at least, because when the Bollinger Band overextends, it usually goes back. And usually if we go a little bit under the 50 weeks moving average, we usually return back. Why? Because people that are invested in the stock market, and do know that people that are invested in the stock market are usually rich people, and rich people usually are smart people. Smart people that are in the stock market are usually smart, so they probably know what they're doing. So this means that they don't want to lose. And usually what happens? The worst thing that you could do in these moments is to sell off. So one of the bad things that you can do is to FOMOing into the stock market, so fear of missing out and trying to catch the trend up, and the same thing can be said when things are falling down, and we call it fall, so fear of losing. And this is the moment when you get the thoughts of, oh my god, I'm going to lose everything, oh my god, I'm going to be homeless, oh my god, everything is going haywire, oh my god, this market will never recover, oh my god, it will take 10 years, oh my god, it will be, oh my god, it will be a bad year, a bad decade, and so on and so on and so on. So probably because the stock market was overextended, we got some people got the margin calls. Do remember that we were talking about the margin calls being overextended. It was about around 23%, if I remember correctly. So some people probably got uh, a call from the margin, so from the broker, so margin call, like it's called. And then we had people that were putting stop losses, because usually people want to protect their money. So when they got the stop losses triggered, and we had a fall down, and people were panic selling. So we had people panic selling, and we had people actually triggering the stop losses, and it happened in the morning. And we still believe, you can see here we had a big sell-off in the morning. Here we had direct sell-off, and you can see the candles all red, 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 and then we had a recovery. We believe that the recovery was also um, also connected with this. Fed is committed to easy money until recovery is much further along, Powell says. And this is very important news, because people look at this news. You have to know that people look at this news. So Powell says, Fed is committed to easy money until recovery is much farther along, Powell says. Federal Reserve Chairman Jerome Powell on Tuesday reiterated the central bank's promise to keep interest rates near zero, which is a great news for the stock market, and maintain its bond buying program until the US economy improves. So far, this program has been successful, as we have seen for the last year. In the Fed's semi-annual monetary policy report to Congress, Powell said that the economy is a long way from our employment and inflation goals, and it is likely to take some time for sustainable further progress to be achieved. He said that officials believe rates should remain near zero until labor market conditions have reached levels consistent with the committee's assessment of maximum employment and inflation, risen 2%, on its track to moderately exceed 2% for some time. The job market is not done. That's the thing I keep coming back to. We need to finish the job with the pandemic, get it under control. And of course, we've seen news yesterday that Fauci said that we're going to probably carry masks until 2023. When we do our analysis, we are thinking about the year 2021 and 2022 as being good years. So we don't believe that we're going to have a big stock crash. We still were planning about were thinking or planning about a pullback, but we thought it would be a little bit further down the way. So it is actually very interesting that it happened today. But looking backwards, it was probably because of fear. So the big players were afraid of what was Powell going to do, what was the Fed going to do, and so they kept on taking some gains, some profits, and so on. The Fed plans to continue its program buying treasuries and mortgage-backed securities at its current pace of 100 billion amount until substantial further progress is made in the US economic recovery for COVID-19, he added. We haven't really been making substantial progress for the last 3 months, but expectations are that will pick up as the pandemic subsides, he said in a response to a question from Senator Pat Toomey. Most of the views in his speech echo prior comments from Powell at panels and in new conferences. Nevertheless, an early session sell-off in technology stocks moderated after his comment, with the Nasdaq Composite down 1.7%, compared with a 2.9% decline before the Fed chairman started to speak. And we saw that after this news came out, the market actually recovered. So we've seen the market recover, and this is good news, and we are still probably going to see an increase in valuation of the companies. We have still some bullish thesis, and we do believe that the Nasdaq could hit 15 to 16,000 points at year's end. We still believe that we are still bullish. In the long run, the market usually keeps going up. So we do advise that in this situation, this market, you invest more conservatively, and you look for good value plays. For example, value play that we like is Walgreen Boots Alliance, which was one of the worst performing stock of the Nasdaq last year, and in this time holds great. It has a nice dividend. So in our opinion, if you want to invest in this market, it still makes sense to buy Walgreen Boots. So what is the future going to hold? We don't know, nobody knows that, but in the long run the market goes up. So we wanted to reassure you and that we believe that the market is going to be fine, and the market, until there are people, and until there are people that want to make money, the stock market is going to be a great place to make money and to achieve financial freedom, which is actually the reason why we are here. So until next time, we hope that you had a great time with us, that you learned a lot. Please, if you like the video, smash the like button, and until next time, we wish you great fortune in the stock market.